Good morning, everyone, and thank you for joining Councillor Buchanan and Mitchell again. For those of you who have been with us before, you'll note that one of our presenters is a frequent presenter. The session today is entitled Paycheck Protection Program, What the Consolidated Appropriations Act Means for Not-for-Profit Organizations. And this 1-hour session is going to be hosted by Julia Lafferty and Tom Hudson. Julia Lafferty is a principal and a director of not-for-profit services at Councillor Buchanan and Mitchell. She has more than 30 years of accounting and auditing experience with a concentration in not-for-profit organizations. She also performs peer review and internal audit engagements, drafts organizational accounting policies and procedures, and consults on operational efficiency reviews, agreed upon procedures, and federal grant compliance and reporting. Julia serves as a member of the Board of Governors of the Greater Washington Society of CPAs. She served as chair of GWS CPA's 2018 Nonprofit Symposium, and she's a 2-time speaker at GWS CPA's Employee Benefit Plan Conference. Julia is also a trainer for CBM Certified Nonprofit Accounting Professional Training Program, which is given twice a year, including this coming May, to help accountants, executives, and consultants build greater familiarity and an understanding of not-for-profit finances. Tom Hudson is a tax supervisor at CBM with nearly 10 years of experience in income taxes, personal finance, and public accounting. He is a director of CBM's Emerging Business Solutions Group and has been the firm's most prolific presenter on the SBA's Paycheck Protection Program since last spring. His experience is primarily composed of complicated business income tax returns and compilation and review engagements. He uses his experience in tax, personal finance, and business valuation to best serve those who rely on CBM and its team of experienced professionals. Tom holds the Personal Finance Specialist and Certified Valuation Analyst designations. Thank you again for those joining us this morning. We would ask that as a courtesy, please keep your video off for our presenters. We'd also like to thank those of you who submitted questions during the registration process. Those questions have been passed along to the presenter and have been incorporated into today's presentation. If for some reason we don't get to your question, please use the chat box in today's presentation to submit your questions. The presenters will be focusing on the content of their presentation and saving Q&A until the end. If for whatever reason there is a burning question that we don't get to at all, you'll be able to reach out to our presenters after the session today. The session is being recorded and presentation slides will be sent to attendees after the meeting. If you are participating on your phone, we don't know who you are. All we have is your phone number, so please do email me your name and your phone number so we can make sure that we do get you the slides. Thank you one more time for joining us, and I'm going to turn it over now to Julia and Tom.
Thanks, Joe. I did notice while Joe was making the introductions, it froze a little bit. So if you're noticing freezing, please let us know in the chat box, and I will be monitoring the chat box for questions as we go along. The Paycheck Protection Program reopened on January 11th, and the Consolidated Appropriations Act was like 5,500 pages long and $900 billion of economic stimulus. So that is a lot to read, but we are going to focus today on the Paycheck Protection Plan. Tom and I are very happy to be here, and I'm very happy to be presenting with Tom. Tom is our resident expert on the PPP program. I think
Naturally.
my colleagues are informed. So we really appreciate all of Tom's effort in this process. Overview of items to discuss. They reopened funding in under the federal paycheck program through March 31st, 2021. Things are always changing, so just pay attention. But for right now, try to plan to get your information in by May 31st. They appropriate $284 billion, and $35 billion was set aside for first-time borrowers. So there's a fair amount of money out there. The loans, again, are being made available through the Small Business Association, the SBA. As many of you know, the 501c3s and 501c19s were included in the original PPP loan. Through a lot of effort from the nonprofit community and a lot of organizations, the 501c6s were included this time around. Congress, I believe, was under the misconception that all 501c6 organizations do is lobbying, and we all know that's not true. But a lot of people spend a lot of time and effort working on that. So I want to thank them. I know they're not here right now, but and many of you who wrote letters, I think we all owe you a thanks. The introduction of PPP introduces a new concept called second draw. There'll be a first draw and a second draw. And the second draw is really the second loan received by a borrower. So up to this point, if you have not received a loan, you will be doing a first draw. So it's pretty clear and pretty simple, but the first loan you get is a first draw, and then the second loan would be a second draw. We'll discuss the eligibility criteria in one of the slides coming up. Tom is going to spend some time on the employee retention credits, which are employee paid, which are credits on employer paid payroll taxes. The new item here is that an employer can receive both a PPP loan and an ERC credit. You just cannot double dip, and Tom will talk a little bit about that. And then finally, today we're going to go through the questions that have been submitted prior to the program, and we'll also try to get to any questions that you put in the chat box.
Yeah, and Julia, just one of the things I always like to clarify, when we say PPP1, we're talking about the first program, and PPP2, we're talking about the second program. That's just how we're going to call them probably, because second draw and differentiating the programs gets difficult. So that's what we mean when we say that.
Right. But in this program that just opened, many people will have a first draw.
Correct. For the newly eligible entities, 501c6s specifically.
Yes.
This is their first one. But it's all the same pot of money. It's important to note.
So anyone who this is their first draw, it would be the first draw in the second PPP round.
Correct.
The first item for taxable entities, and this was a big item of confusion, it's now clarified that expenses paid with PPP funds are tax deductible, and that was a big deal. Along with expenses considered eligible in the original PPP program, which were rent, utilities, mortgage interest, and healthcare costs, there are 4 new eligible expenses: covered operations expenditures, property damage cost, supplier cost, and covered worker protection, which is PPP, and facility modifications to protect the employees and visitors. There is a clarification on the 100,000 compensation limit for 2019 wages. As Tom can tell you, this got a little confusing the first time around, so they've clarified how to calculate that, and I think that'll be helpful.
Yeah, it's just under 100K annually. Before it was kind of, if they went over it per pay period, and that was difficult to kind of track down for all of your employees because it could have been a bonus that sent them over that limit for 100K when you look at it per pay period. So they just said, hey, anyone under 100K, they're going to go into one table. Anyone over 100K, they're in another table, and that makes it easy for the purposes of forgiveness.
Okay, I believe we froze a little bit, Tom.
Yeah, just saying that, 100K, clear line in the sand now. And
yes,
for the purposes of the forgiveness application, it's just easier to figure out how to exactly separate your employees based on the compensation limits set by the program.
And that'll be very helpful in the process. Next slide. In this round 2, borrowers are given a choice of covered period between 8 to 24 weeks to spend the funding dollars. Group insurance payments are now eligible in the first round. Healthcare were eligible. Now it includes dental, vision, and group life. EIDL advance payments are no longer reduce the amount of the PPP loan forgiven. So that's nice. And There are some other 501c6s that are also eligible: housing cooperatives, destination marketing organizations, and certain news organizations.
Important one with the EIDL, if you already had your loan forgiven and you're in this call just to get more information on PPP2, you can bring this up with your lender because that was previously reduced how much you were eligible for forgiveness. So if you had an EIDL loan, a PPP1 loan that's already been forgiven, and you receive that advance of up to $10,000, you are entitled to getting that money back even still. So if you fall into that category, make sure you contact your lender and get that cash that you are owed.
Yes, very good. Here we go. The PPP eligibility criteria: organization cannot employ more than 300 employees, and this is the second round. Organizations do not receive or have lobbying activities greater than 15% of the total activities of the organization. I think this went back and forth between 10 and 15%. Unfortunately, it settled on 15%. The cost of lobbying activities cannot exceed $1 million. I think when you put these all together, I don't think that'll cause a whole lot of trouble for most people. And the organization cannot be organized for promoting or participating in a political campaign. So PACs are not eligible.
Yeah, and important to note that if you are a 501c6, your limit on employees is 300. And that's regardless if you're using PPP1 or PPP2. No one's gotten to 2 yet, but your employee limit is 300 across the board. For anyone else, it's $500 for PPP1 and $300 for PPP2. It's very unique distinction, and I want to note that if 501c6, it's 300 employees, no matter what round of funding you're applying for.
Okay,
and
really good point.
Yeah, one more thing, and in regards to all the lobbying expenses, well, where to look for it, because maybe this year you're not doing as much, or in a previous year you did more of it, etc. You can look at the 990, and you're going to want to rely on those because the SBA will be relying on your tax return to come up with these threshold amounts in terms of how much in terms of dollars that 15% is for you specifically and your entity. So you're going to have to start looking into your tax return from prior years, your financials for this year, and it's going to be tying into a lot of IRC section 162E, which if you're involved in lobbying expenses, you're probably familiar with that section of the tax code. But that's going to be the overarching ruler of how to apply this to your specific organization and whether or not you can qualify in regards to the lobbying restrictions.
Exactly. They've also simplified the application for forgiveness of loans up to $150,000. It's a one-page forgiveness application. The borrower certifies that they complied with all program requirements, certifies that the information provided is true and correct, and no documentation is required with submission. But I do want to stress how important it is to maintain that documentation, to prepare it and to maintain it in case it ever gets asked for again. So I know it's easy just to fill out that one page, but make sure you have the backup. The applications are available now and can be used for both PP1 and PPP2.
Yeah, and a few other important items. If you have a smaller not-for-profit and you only received a loan that's under $50,000, you don't have to calculate or comply with the restrictions in regards to FTE reductions or salary reductions. Since your loan is so small, the SBA has stated that these do not apply to you based on their interpretation, and you just go ahead and submit the most simple form for forgiveness that is possible. But anyone who is over $50,000 but still under 150K and will be using this simplified application for forgiveness, you still have to calculate any FTE reductions or salary reductions if you have them, and then apply that reduction to the requested amount that you are asking for forgiveness. So you still have to do a lot of the math and calculations on the back end, which can be annoying. There's a lot of stuff you have to do in regards to pulling payroll information and running the calculations, but it's a very important distinction that if you're above 50K, you are still subject to those reductions despite having this simplified application for forgiveness. So it's simple, but not super simple.
Hey, Tom, can you talk about, is there a 25% reduction in salaries if it's below 25%?
Yeah, so
Not
you don't,
salaries and number of employees?
yeah, you don't
Safe
suffer any type
harbor
of
of sorts?
penalty if you reduced employee salaries lower than 25%. So just a minor reduction. Of course, SBA is giving a little bit of wiggle room here for you to play with the salaries of employees, but as long as you didn't reduce their salary beyond 25% when looking at it on an annualized basis, then you will not have any type of reduction. FTEs, there's not so much of a little bit of window you can play with, but there's of course circumstances that come up, and what that does is the FTE counts that apply to you go into an FTE quotient calculation, and that is essentially how many employees you had now in your covered period versus the look back periods, and you divide A by B, and that is how you come up with that quotient. And so there may be a reduction if you did have some sort of employees that didn't make it through all the covered period, whether that's if they went on for other jobs and things like that. And there are exceptions when you're looking at the FTE calculations, but they can get kind of sticky, especially if you replace that employee, et cetera, and there's gaps in your covered period. But that's how you calculate it. You should be able to just run through it, and you may have a reduction. But the way the math works for all of these programs, if you spent the funds over the 24-week covered period or whatever period you end up selecting, there should be a big buffer to at least absorb any type of reduction in regards to getting forgiveness. So it's still very much tilted in your favor to get the majority of this loan forgiven. Just know that you have to run these calculations and determine any reductions if you are in fact subject to those.
Right. Thanks for clarifying that, Tom. I did know that the 25% is a bit of a safe harbor as you're looking at this.
Yeah, there's a little bit of a buffer there.
Right. Okay, I'll let you continue on, Tom.
All right, here. So just moving on, something that we wanted to cover at least initially, give it a little bit of talking to, is that in some cases there was lender confusion regarding how the program provided, how much of a loan the program provided to you, given how the law worked at the time. So there's a lot of different lenders. They took conflicting positions on the maximum loans for which you could qualify, and sometimes the loan amounts just ended up being incorrect. That's completely fine. That's going to happen. There was a lot of confusion. The rollout was a little bit rocky, but let's just agree it could have probably been a little better. In the event that this happened to you, and this could have happened to any of the not-for-profits that we have on the call, but especially if you've been to this program before, the SBA will make second disbursements to adjust your loan amount to the proper amount if you meet any of the criteria. Broadly, it's mostly one of the things that's going to happen in most cases is that partnerships, there's a lot of confusion about you can include their compensation. It's not really relevant for this conversation, but just throwing that information out there. Maybe this happened to some of you. If you repaid your whole PPP loan because you didn't think you qualified or you just worried about it, you returned the funds, or a portion of it, you may be eligible for some type of true up. So if you decided to make that call at least part way through sometime last year, after receiving and getting a disbursement from the SBA, your PPP loan proceeds, you returned it, there might be a little bit of redemption for you in the future. So that's something you have to work out with your lender that you use to complete that process, and it's something you should look into if you do in fact fall into these circumstances. So this is just all for your information, and we want everyone to be aware that it exists. And in the event that you had a loan that was too high, if you included independent contractors and it got through the lender, and even if this was made in good faith, unfortunately, you do have to return that money and it will be paid back, and you cannot achieve forgiveness for that specific part. So they take it easy on you if you didn't get enough of a loan, but if you took too much, they don't want that happening, and they will ask that you return the funds that, of course, you were not eligible for.
Yeah, Tom, I think if there's people on here that returned their PPP loan, some of them returned it because of their concern about the certification that it's a necessity, that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Sometimes early on, people were very unsure about that, but that may have come to fruition, and that gives you another opportunity here.
Yeah, so to elaborate on that, any loan that was under $2 million, the SBA said that we're just going to take the stance that a loan under that amount is meeting the qualified requirements for need, and they're going to say, we trust that you need it, and you can make the argument at least, or the interpretation. Just given all of the uncertainty, I think it's a good stance for them to take. It would have taken a massive amount of resources for the SBA to argue for every single different loan that they've dispersed, whether or not someone actually needs it. So they drew a line in the sand and said, if you're below this dollar amount, we trust that you needed it. For larger loans, at least from PPP1 that started getting over 2 million, at least for affiliated groups, you do have to make, you have to fill out another form that they've been sending out in the past few months in regards to testifying, or at least stating that you do meet the requirements for need, and that could be potentially evaluated by the SBA if they so choose. So there's if you have a smaller loan, it's not something to worry about. You qualify in regards to need. Even if you have reserves, no one knows what the future is going to bring, and that's something that I don't feel like they'll bring the hammer down on for anybody who may make maybe just some type of misjudgment, because we honestly don't know what the future can hold. So you shouldn't be worried about, do I qualify for need, because my organization seems to be sitting okay right now. SBA realizes it's hard to project what's going to go on in the next few months. So smaller loans under the 2 million mark do qualify for automatic assumption that you need it.
Right. I do know going through the first round, there were a lot of discussions at the nonprofits organizations, particularly with the boards, the discussion of the necessity. So it is something each organization needs to look at and decide on their own. But I think there is a general thought that you do not have to totally consider your reserves, because you just look at the information currently, what's going on.
And of course, communicate with your lender. They are the ones who will be approving your applications and your forgiveness applications. So they do have at least a good understanding of the program, just as we do, and they can help guide you through the process. They're on your side most of the time. I understand they're overwhelmed right now, but just be patient and work with them, and they'll get you through the process and hopefully get you what you need. Next, let's hop into what everyone is probably focused on at this point, PPP Round 2, and this is the second draw. So this is the newly introduced program, second draw of loans. How do I qualify? First, you need to have had a PPP1 loan in order to qualify for PPP2. I want to make that very clear. So we have our 501c6s. You just got into this program. You will be going through the PPP1 program with the one stipulation that you only have a 300 employee headcount limit on the eligibility criteria. So for everyone else, PPP2, no matter what type of entity it is, this is for-profit, not-for-profit, you have to have 300 employees or less, and they're trying to concentrate really where the PPP Round 2 goes. They're trying to keep out of those companies who are above 300 employees but below 500 from round 1, so they wouldn't be eligible coming here into the second round. In regards to this number, it's always been a simple head count. So this number is just how many people are on your payroll, and it doesn't rely on the FTE logic that we use in all the forgiveness calculations, where you take the total amount of hours somebody worked and divide it by the number of weeks that's in that period in order to arrive at an FTE count. That's not applicable right here. It will be on your applications when you ask for forgiveness, but it's not what you're going to use to calculate employees right now. It's just numbers on the payroll. Part-time, full-time, 5 hours a week, they all count as one. Next, the most important part is that you have to have experienced a 25% decrease in receipts in any 2020 quarter when compared to the same quarter in 2019. So you can look at this at an annual level because mathematically, if you have a 25% decrease across the year, that means one of the quarters that had to have been at least below 25%. But I do recommend focusing on the financials per quarter to see if you meet the specific requirements. And just as an FYI to everyone, the loans, they've been decreased all the way down to a maximum of 2 million, and it was previously about 5 million before, or 10 million before. So that's something that they're trying to do by giving out, at least limiting how much any one entity can receive to the lesser of the payroll calculation, 2.5 months payroll, or $2 million.
Hey, Tom?
Yeah.
While we're on this page, someone was asking about the date of the number of people on payroll. Is that as of a year-end date?
I believe it's at the date of the application.
The date of the application. Thank you.
Correct. So when you're applying right now, how many people do you have in your
Okay.
organization? I understand somebody on the line might be able to finagle with that number a bit. I'm not sure if that's intended, but it is at the time that you're applying for the forgiveness or for the application for the loan.
Thank you.
PPP2, same terms and conditions as PPP1, except for the things that we covered in the previous slides where they made a few changes. They basically made PPP1 wider, and PPP2 is also going to incorporate a lot of those changes as well. So some of the new expenses that we covered on the previous slides, you can use those for PPP2 as well, which is nice considering we don't really know what's coming down the bend. So any changes that you may have to make inside of your business in regards to making it comply with health and safety standards, that is something that you'll have to do internally, and you can use in regards to an eligible expense, and that can be included on the forgiveness application. So most of the processes are going to be the same. The only difference in regards to calculating your loan for this second draw is that you can use 2020 payroll. So everyone used 2019 payroll. That was a requirement when PPP1 was rolled out, and when the program was introduced. 2019 payroll is how you calculate everything. You looked at all the annual payroll, divided it by 12, and then multiplied it by 2.5. Of course, made limits for anybody over 100K. You can do that using 2020 payroll. So in the event that your 2020 payroll expense is higher than your 2019 payroll expense, you could potentially get a higher loan than you did in PPP1 based on the math and how this program calculates the proper loan amount. So that is one area where you can kind of use some analysis and kind of look at the numbers in order to achieve a higher loan, but everything else will be the same, even if you choose that 2020 payroll amount to calculate your loan amount. You're going to be looking at all the same look back windows that you have to worry about for the forgiveness application, and all of the safe harbors, etc. All the other dates, they do not change. It's just one area where you can make an adjustment. And I'm not sure if there's any not-for-profits who may fall into the hospitality industry. If you're on the call, but you could potentially get a higher loan amount because there's a specific carve out for restaurants and accommodation and food industries, etc. So that's based on your NAICS code. It's related to the tax return, so you'll have to look there and see if you are eligible. It's mostly bars, restaurants, hotels, in any circumstance. So that's PPP2 second draw. So let's talk about the main requirement here, gross receipts. How are we going to show 25% reduction quarter over quarter? Well, gross receipts, and this here is the definition for all business, for-profit businesses, but I just wanted to make it clear so that we can see the differences. It's basically everything coming in the door. I want everyone to think in that regard. All the money coming in the door is going to be considered gross receipts, with a few exceptions and a few adjustments. One of the things is you can exclude your PPP loan. So last year, when you received your PPP loan, obviously that came in the door. It looks like a gross receipt. You can take that out. Any sales tax, if anyone is actually required to pay that, that's something that you'll have to adjust out as well because you were just collecting it on behalf of the state. Beyond that, gross receipts, it's pretty broad and it's defined by what you see here. And then on the next slide, which I'll get to in a moment, we do have the specific definition for not-for-profits and gross receipts. But for nonprofits, first, the gross revenue is defined by a specific section of the tax code. It cites 6033 of the IRC. And that basically, if you go through that section of the IRS code, it doesn't actually define gross receipts there. It kind of defers and suggests that you should look at the tax form that you file for specific instructions as to what is gross receipts for your entity. So if you file a 990, you're going to want to look at the 990 instructions, and it has a step-by-step calculation as to how to come up with your gross receipts using the lines that you used on your tax return and how that was organized and how that was filed. So there are step-by-step instructions. That's where you should look, but we'll get into a little bit more of that on the next slide. And then, as I mentioned on the last slide, you can use 19 or 2020 payroll. We're just reiterating it here just so we can drive that point home and everyone knows that that's how you can calculate the loan. So here's the actual definition provided by the SBA. It came out in one of the most recent IFRs, and the IFRs are what they're using to give us clarification on how the program works. They're lengthy documents coming from the SBA, which says, well, this is what we meant by this, and this is what we meant by this, and they give us a little bit of elaboration. And this one covers exactly what our gross receipts at a high level. And one of the important lines here that I wanted to highlight is the fourth bullet point, and it's talking about the sale of assets without the reduction for any type of cost basis. So selling investments and things like that, that is included in gross receipts. That's something I've seen a lot of questions about. In short, this is the higher level overarching definition that you need to abide by. Again, there are detailed steps on the Form 990 that do walk you through how to do this for your organization and what lines and what items need to be included. So that's where you're going to want to look in regards to step-by-step calculation, but this is what you want to look at in regards to, I'm not sure if expense A or expense B falls into here, etc. You kind of want to look at this definition and try to decide using that. But this is what we have right now. Maybe there's more coming from the SBA. I'm not sure, because this is very specific, but at the same time rather broad as well. There could be a few exceptions where we're just not sure how to treat it. So that's something your bank, of course, will have to help you work through. You can communicate with them, perhaps get their opinion in regards to the 25% reduction in receipts. So if you're close and you're relying on something that's maybe unclear, definitely seek some more guidance before you move forward with the application. All right, so in regards to the gross receipts, if you are small or not-for-profit and your loan is looking like it's going to be under $150,000, then you don't have to submit any type of documentation to your lender when you apply for this PPP2 that supports the drop in receipts. I'm not saying that you don't have to figure out whether or not that actually happened to you and that you're eligible. You still have that responsibility. But if your PPP is over $150,000, there's a bunch of different things that you're going to have to submit to your lender. That includes quarterly financials that, of course, you certify in some way. If they're unaudited and they're really just the raw books, the banks are asking that you personally say, these are good books. I promise they're right. They're good books. And they're going to rely on you to make that certification, because the banks aren't required to audit any of this information or search through it as much as they can. Their job is to simply make sure that you say you're eligible and that weight and burden of proof is on you. If you have audited quarterly financials, that's great. That's probably the best thing you can have. I understand a lot of people don't have that, but if you do, it should be easy peasy for you. Bank statements is something that banks have been accepting, showing this decrease in receipts. They want you to, I've seen some of them say, we want you to highlight what's coming in and out of the door. That's probably a little bit more labor intensive, but if it's an important loan for your organization, then it's definitely something you'll have to endure in order to get the loan and show that you are eligible. And then you could also use a P&L that you have that demonstrates the loss quarter over quarter as well. These are all acceptable. There's, of course, other things, but these are the most common ones and things that I've seen banks approve as part of the PPP2 second draw application.
Okay, I just want to toss in, I'm all for documentation, and I would suggest you keep a file and maintain the documentation in a file, so you're not going back trying to figure out what
Of
it
course,
was.
SBA says they want you to retain everything for 4 years, so that's where they put that, and I think that's the period in which they can come back and audit any of these PPP applications. In regards to speculation as to how much of those will get looked at, I don't think we could opine on it, but I think their resources are slim, and I think there's a lot of individuals involved in this program. And if I had to make a bet, I would wager that they are probably going to look into the higher dollar PPP loans to ensure that everything is correct and in accordance with the program at that level, because there are we have stats coming here soon as to the number of loans, and there are a lot of loans.
I agree 100%, Tom, but I just want to tell people, make it easy on yourself and just keep a file.
If you keep those documents, it'll be very easy. So
yes.
We can't stress the documentation any more than
I agree with Tom on the chance of audit, but let's be careful.
Yeah, just being realistic. That's all we're doing.
Yeah. So
here's the latest round of statistics, and this is something we've updated from our previous presentations. This is just recent through the 24th of January. 400,000 loans for a total of 35 billion, and we had 285. So we're still looking at around 250 at least of loans here that can, or at least funding. 250 billion still left for this program. So there was an original rush on the door to get funding, but it seems to at least leveled out and indicate that there should be enough money based on the need for the programs. So just speculating, just watching this, it's important for everyone to know that if you're struggling or you're frustrated by trying to get through to your lender or having issues or just worried about getting started, there's a little bit of time, at least for now. I hope I don't put my foot in my mouth and this doesn't run away quickly, but you will have to at least look for news articles updating on how much funding is left here in the next few weeks or so, but it's looking pretty good and pretty steady, at least for right now. You can see the major lenders here based on the amount of dollars that they have lended, the average loan size. Most of them seem to be under $150,000. I think some of the numbers here speak to the clientele that the banks have specifically. Like one Signature Bank, their average loan is over 300K, while what's one right below it, New Tech, is a $53,000 average loan. So I think that goes to show maybe who they're servicing or who they focus on from a business perspective. But that's what we're looking at in terms of statistics, and that's the current state of the program.
When you're talking about banks, Tom, it's probably a good idea to go back to the bank where if you're doing a second round.
Yeah.
You could try to go back to the bank that you did the first draw with.
Yeah, they make it very easy because they do retain your information, and most of the portals that I've seen, they do have that already in there for your specific PPP-1 loan. And actually, while I have it on my mind, one of the questions that was submitted, and we'll get to it, but I want to answer it now since it's relevant, is that if you had a PPP-1 loan, the only thing that you have to certify is that you have used or you will use all of the funds from PPP-1 in order to be eligible for a PPP-2 loan disbursement. You do not have to apply and have a successful application in regards to forgiveness in order to use PPP-2. That's not required.
Tom, do you have to have spent the money by the time you get the second loan?
They ask that you have spent all the money or you will spend by the time you receive a PPP-2 loan disbursement.
I just wanted to clarify. Yep.
Yeah.
Thank
they want the money to be used. And at this point, unless there are unique circumstances, most of that money should have been utilized, at least back if you, because the program closed back in August.
August, so yeah. That shouldn't be an issue.
You'd be out of a covered period by now and probably start breaking a lot of rules for the program. In regards to how to even treat it at this point, it would be interesting to see. So just some PPP loan application tips. Just stick with it. Be vigilant. Try to provide more detail in the chances that it's there. If you received a PPP-1 loan, we just mentioned this, it makes sense to use the same bank. All your documents will still be in the portal, and it should be easy if you're using 2019 payroll again. You will have to upload new documents if you decide to use 2020 payroll, but it could save you a lot of time and a little bit of headache if you go, if you go back to the same lender, just in terms of convenience. But if you choose to go with a different lender, not a problem, it's your choice. Just bringing up that it could save you a little bit of time concerning getting all that information and documentation in there again. There's 285 billion. We just showed about 35 was gone through the 24th of January. More aid is potentially on the table. There's more talk about stimulus already here for even more of it. And I think if the federal government sees that the PPP is under high demand, they might make adjustments and perhaps allocate some more money towards it if necessary. So again, I can't really speak to how fast the funds will go. We're looking at the trend, seems to be okay, but if there is a huge spike in demand for some reason and a lot of those funds do start to dwindle, I think there is a potential for more. So don't be disheartened if that does actually happen. Next, be patient in waiting for your approval. SBA, Treasury, they're overwhelmed right now. They have limited resources. I feel like a lot of them actually canceled their Christmas vacations or their holiday vacations here at the end of the year when all of this stuff changed and they had to get back to work to defining all of this and releasing guidance. Yeah.
I think we're frozen.
I think we're good, Julia. I think it's on your end. All good?
I think we're back.
All right.
I just wanted you to define for us what a vacation is. Many of us have forgotten what a vacation.
A vacation, yeah, that's what everyone is on right now during this presentation, having a good time.
Yeah, okay, sorry.
It's fine. Wait for clarification in a lot of these rules. I'm not saying slow down if you need to get an application in for PPP2, but maybe in regards, maybe I'm speaking towards forgiveness a little bit more. There's still some what ifs and what ands in regards to the program. Sometimes there can be circumstances that arise there's just not an answer for. This is a one size fits all type program, and to be honest, we're even lumping in not-for-profits and for-profit businesses into the same pot. While they're trying to make differences where they apply, sometimes there's just not a lot of clarification on what to do. And you're going to have to seek guidance, and maybe it's something the SBA is focusing on, but they're coming out with stuff every week that kind of changes the scene. So it's not a rush, but at the same time, the counters are still going. And for current PPP1 loan applicants, I just want to remind you that the timer in regards to applying for forgiveness, you don't have to make a payment on the loan until 10 months from the end of your covered period. So most people, end of the covered period was October-ish time frame. If you got a loan right when the program came out, it'd be later if you didn't get one until August or so when the program closed. But you don't have to make a payment until 10 months from the end of that period. So most loans that's looking into summer 2021, so you've got a few months here before anything happens in regards to the PPP loan. But that's also just making a payment in summer 2021. That has nothing to do with your forgiveness. They're just asking that you start payment and start sending money back. And you could eventually apply for forgiveness in summer 2021, get it fully approved for forgiveness, and the bank would just send you a check to true up for the amount that you had already paid in. So it's a timer in regards to making payment, but you have until the end of the maturity date of the loan, which is either 2 or 5 years, depending on when you received it, or if you negotiated with your bank along a maturity, to actually apply for forgiveness. No reason to wait that long, but it is available.
Right. Tom, we certainly suggest you go ahead and get that application in. And everything I'm seeing in the nonprofit community and talking to my peers, we're seeing everyone who has applied thus far. We have not seen anyone who was denied forgiveness. So yeah, that's a positive feeling, but it could happen. But so far, we're just not seeing it.
Yeah. Nothing to worry about is the point. Everyone wants these loans forgiven. A lot of the parties involved want to see these forgiven, and they want that aid to go back, and they don't want to put any of these businesses under any further stress than a lot of them are already under right now. So that's the general overarching tone. Don't be scared. Don't be worried. Your lender's on your side. They'll work with you. And so will the SBA, hopefully, and so will your team of accountants here at CBM if you need any assistance. A little more on that. We are offering services in regards to PPP forgiveness applications. We have a tiered service that we are offering. Just wanted to throw it in here real quick. Based on whatever type of services you need. If you think that you understand the program enough where you can take a whack at the application, but you would just like somebody who's been dealing with this since its introduction back in March 2020 to give it a glance over, to make sure that you're in accordance with the rules and all the programs, and that your application is okay and it looks okay. We do offer that service. If you don't think that you are equipped, or just there's too much information because it is overwhelming, to actually generate your forgiveness application, we will help you with that as well, and we will pull all the information together, help you, show you what the application should look like, and then provide you with the information to submit to your lender, which you will go in and make all those certifications through your lender's portal and upload all the required documents. And then we have one where, you know what, you just need a few questions answered. You're just not sure about a few things, but you think you got it, or you just need some clarification or pointed in the right direction. We offer that as a service as well. And this is in regards to PPP2 is also, if you need assistance looking at that and then your eligibility, we can assist with those calculations as well. So just throwing that out, we're here for you if you need us. And that's something you can use by emailing Julia or emailing myself, and we'll have our emails up here at the end. And of course, you will get a copy of the slides, and our emails are on the last page. One thing here, just in the last 15 minutes, that has to get a little bit of attention, and is the employee retention credit. And I don't want to get into a lot of the specific details because it can get kind of heavy. But our general message is that there is an employee retention credit, because it seems to be a hidden gem amongst a lot of businesses out there who just don't know about it. But there is a significant credit that you can receive based on wages that you paid your employees if you meet the criteria. And for 2020, the criteria is different than 2021. So if your business was shut down, closed down, or at least impacted by any type of local or federal, any type of restrictions, regulations that said you must abide by these rules, and that's kind of decreasing your operations in some respect, then you may be qualified for 2020. Or your receipts or money coming in the door decreased over 50%. And that's a big cliff, at least for 2020. And what's interesting about this is that previously no one looked at the ERC. It wasn't something that everyone considered because you had to choose between the PPP and the ERC. And for a lot of entities, not for profit, for businesses, it was generally the same theme across the board. PPP just made a lot more sense. Well, here at the end of December, with the last 4 days of the year, they said, oh, you can use ERC 2 for 2020. And we can do it retroactively. So they're making adjustments now to allow that to happen. So I want everyone to at least look into ERC for 2020, see if you're eligible, because you could get up to $5,000 back per employee that received at least $10,000 in qualified wages throughout 2020. So significant credit, especially when you start multiplying how many employees you have. It could be a significant cash influx to your business that, of course, would be well received right now, just for paying your employees during some of the closed periods where you were restricted in regards to your operations, or if you met that 50% reduction in gross receipts. 2021, it substantially changes. It makes the credit even more advantageous by increasing that credit to $7,000, based on $7,000 per employee for $10,000 that was paid to that employee. And then it also goes a step further and says per quarter. And they extended this program here through the first half of the year. So there's 2 quarters in 2021, quarter 1 and quarter 2, where you may be eligible. We don't know yet because, of course, we're sitting smack dab in one of the quarters right now. So you'll want to look into, at least watch the numbers and see how they're trending for this year. And if you had a 20% decline in receipts, you may be eligible for this program.
Note that the base year goes back again to 2019.
Yes, compared to 2019. So you're looking, they call 2019 was kind of pre-pandemic, before all of this stuff happened and before businesses were impacted and times were great. And we didn't have to deal with a lot of this stuff. But that's the measurement period you're going to be looking at. I just want to bring the message to everyone that that credit's there. We're very well versed in it. There's a lot of developments going on with it because it's not exactly clear how the 2 programs are going to interact. What we're looking at right now is try to identify if you are near the criteria, may meet the criteria, could possibly get some of the ERC, and then we're going to have to kind of wait and look for guidance how it interacts with the PPP. So if you haven't applied for forgiveness yet, that might be, and I'm speaking generally here, one of the situations where you might want to hold off on that forgiveness application, because having a finalized application wouldn't be as much as a luxury as having an unfinalized one, because you can change your covered period now, which was part of the CAA, to something less than 24 weeks, which will decrease the amount of wages that you apply towards the PPP and that forgiveness, which of course would make more available for the ERC. This is all speculative right now. One of the points we have here on the screen, number 3, is that we're waiting from clarification from the SBA and the IRS. This is all done through payroll tax forms. So the IRS is going through and adding this capability to some of the existing payroll forms. There's 7200, which will get you an advanced tax credit, which is looking like the route that they're going to be taking for administering this credit. And then also 941s will come into play as well. There's adjustments coming. They've been making changes slowly. It's a probably long bureaucratic process for them to work through. So hopefully it gets wrapped up here, at least in February, and that real information comes out on how this is going to work alongside each other, PPP and ERC. And of course, you can bet that when that comes out, we will be presenting on it thoroughly and explaining how that actually unfolded. So some of the other tips just regarding ERC: if you've already applied for forgiveness, you're kind of in a tougher spot, especially if that's forgiven. But I can't say that with confidence because we need to see the rules. There might be a little bit of an olive branch extended by the government here, because you did nothing wrong by applying for forgiveness right now. And it would put you at a disadvantage potentially. So if you qualify for ERC, maybe take a second pause on that forgiveness application, at least for right now.
Yeah, it seems like it's worth doing some calculations, Tom.
Yes, this is significant credit. That's the point that we want to hammer home.
It is significant.
It's up to 500 employees here in 2021. So especially here in this next year, you could be looking at, if you run the math on and have a company that large or not-for-profit that large, 7,000 per employee per quarter, it could get into the millions in regards to a cash influx into your business.
It
It's
is potentially could be significant.
Yes, it's very
dollars.
large, and that's what we want to throw out to the community right now. Just know that it's there, look at it, and if you need help with it, of course, we're available to assist you in assessing your eligibility. Again, look at your 2021 quarterly financials here as you start going through this first and second quarter of the year, because the credit is very advantageous in 2021, and the criteria for meeting it is quite low. Alternatively, if you don't meet the requirements for PPP2, ERC is something that you can look at here as well, to at least aid your business somewhat. So that's something you're gonna have to consider if you are in that situation. So hopping into some of the questions that were submitted to us in advance, we're just gonna give these a little bit of speaking to and hope that we address the question to your, let's see. All right, one. Somebody asked, is funding still available if the organization had no paid staff but is still suffering from the financial impact of the pandemic? So the whole calculation of the loan amount is based purely on payroll costs. If you don't have any staff who were paid and you don't have that actual payroll cost, then unfortunately you are not eligible for the loan. I think there's a little bit larger of a question here, so I'm not sure exactly how it would exist without having any type of staff. Forgive me if that's an ignorant statement, but if your payroll is somehow administered through another organization, like a parent organization, you're going to have to coordinate with them in regards to applying for separate PPP loans, because if there's a part of that payroll cost that is allocated to you, then you can use that portion to apply for a PPP loan, of course, for the amount that is attributable to your business. So that gets a little bit more technical. If you're in that situation, please reach out and we can help guide you through the process. If you have a parent organization, maybe if you're kind of structured that way, where you have one overarching national organization, smaller chapters, things like that, excuse me, you'll have to coordinate with them in regards to eligibility, because it starts getting into affiliation rules and other things to consider that we didn't necessarily cover during the presentation. So I'm reaching a bit there, but I hope I answered that one to your liking. Next. Right. Can organizations that have not yet received forgiveness for first draw loans still apply for the second draw? Yes. Again, the only criteria, the only requirements is that you have to have used the funds or will use the funds by the date of the disbursement for PPP loan number 2. Third, somebody mentioned this, and this is something I've seen and gotten a lot of questions about, but somebody said it's difficult to complete the application when they ask who owns the business, their social security number, and the percentage that they own. I think this is just the banks probably building their portal a little bit recklessly, because this is not something that is going to be applicable to a not-for-profit. I've seen very different ways to bypass this. Some people have just put not-for-profit and then leave social security number blank and then just put 100% or something like that. Some people have used maybe the leading officer, the CEO, whoever's in charge of the organization, put their information on the top line and put 100%. Of course, they obviously don't own that. I think it's just the bank portals doing a little bit of a lazy job when building these, because this is, of course, not applicable for not-for-profits. So you may encounter that when you're going through your portals. Just know that the banks are going to review these. They do get a human in there to work through some of this computerized process. And as long as you can get past that with something that's acceptable for now, in order to submit the application, then you should be fine. Somebody next. We applied for a PPP loan the first time, got it, but withdrew the application. And that was because you didn't know that 501c6s were ineligible at the time. Will that impact anything now that we're finally eligible to apply? It shouldn't. It should not. Of course, going back through that same lender would probably make this a smooth process. I don't think it'll cause any type of hiccup. If it does, that's definitely something that your lender should be able to sort out on their end. It might take a little bit more time, but that does not make you ineligible in any way or prevent you from actually getting a PPP loan that you are entitled to now. One of the final questions that we received in advance is a 527 organization eligible? And then it goes into your budget and what you've been doing in terms of your end regarding the 25% decrease. My understanding is that 527s are not eligible for the program, the PPPs. I haven't looked into this, and I have not worked with many 527 organizations myself. Julia, if you know something different, please let me know. But I don't think 527s are eligible for the program because there are specific carve-outs that says we don't. The political organizations are not eligible for these. I did not see anything from the SBA, and this question caused me to go look through all of the documents that the SBA has released, and I haven't followed this issue specifically. But there was nothing that either named 527s as a yes or a no. So I'm pretty sure they do not, based on the fact that 527s, my understanding is that they're primarily political organizations, and those are not eligible for the PPP program, the PPP.
Yeah,
Any thoughts on that, Julia?
No, I agree with what you're saying because they didn't specifically identify. But go on to the next question. The second part of the question, can you go back? Yeah. It says for round 2, because not related, other than the 527, they're asking about comparing the 25 decrease in receipts against the original 220 budget. I believe you have to go back to the 2019 actuals, like we just discussed. So I just thought I'd point that out in case there were other people with that same question. Yeah,
budgeted numbers will not be considered at all,
right,
for the PPP2 process, and wouldn't be something you have to consider when looking for that 25% decrease. We need to look at the actual numbers, what's actually coming in the door, and what actually is included in your gross receipts per the definitions that we covered earlier.
Okay, I just thought it was worth making that point. There were a couple questions that came in, and it looks like we still have a couple minutes, Tom. Can I go ahead and read these to you?
Sure.
We are a 501c3, a church, and are not required to file tax returns. This will impact our application as we cannot produce some of the tax forms they request. They also want to know about ownership of the business, which I think you answered that part of the question. And of course, no one owns the church. How do we respond to this question on the application?
So 501c3s, even religious organizations, I believe, are eligible for the program. You'll just have to work with the lender, see if you can somehow get that application through. If they're requiring you to submit payroll documents, I don't believe that is applicable, of course. For the documents that you aren't required to file, maybe make that argument that you're not required to file them. But as long as you have payroll, that is the one thing that is required to calculate a loan. And unfortunately, if you don't have that, then you are not eligible for the program. So it's not an issue I've encountered before, but you need to, at least in regards to the ownership question for the church, you need to get an answer through so that you can submit the application and get it through your lender. So you could put whoever runs the entity and 100% ownership just to get through your bank's portal.
Okay, the next question is, are the need considerations you discussed for PPP1 the same for PPP2, or is there a different standard of evaluating need since the overall loan limit is $2 million?
No, I believe all the need
the same
requirements are still the same for PPP2.
They are. I agree too. And then we have a question. We have significant revenue from a state government. For the quarter comparison, do we need to use accrual basis rather than cash basis since there was no reduction in the amount due from the state government?
So the guidance I've seen regarding what method of accounting to use is that you need to use the one that you have selected for your income tax return and the method that you have chosen. You need to stick with that. So in regards to cash or accrual, use the one that you have always been using and that you've used on your income tax returns.
Good. And I think the last, should we record the awarded grants or the cash disbursements? I'm not sure exactly what that question is getting to, but yes, if you're spending the money, you do record that. And when you get the money in, you record it. Tom, do you have a different take on what that question?
It was around 11:30. I'm trying to think where we were in the presentation.
Yeah.
But I can't. If you want to follow up with us and submit a little more clarifying information via email, we'll put those up on the screen in a moment, and they'll be in the slides. Maybe we can hopefully answer your question.
Okay, one more minute and one more question. Let's see if we can do this. We received $170,000 PPP loan in mid-2020 and will apply for forgiveness in March 2021. So far, we have expenses of $175. When we submit documents for forgiveness, Do we need to submit exactly 170 or 175? SAB will only forgive up to 170. Then we reclassify these 5,000 not to be forgiven.
Okay, so a lot of forgiveness applications, at least up to this point, have payroll expenses and non-payroll expenses that are eligible that far exceed the amount of the loan. That's completely okay. The only time I think this would matter in regards to including that 5,000 or not is if you are eligible for the ERC and how it could potentially interact with the eligibility for that credit. So all the applications I've seen that we've done up till now, again, have just included all of the costs that were incurred during that covered period. Again, it gets more complicated now that you can select a shorter covered period. You may not have to include all of those expenses. You can kind of stop at, say, 20 weeks where you met those numbers, but it's not going to cause any problem, and there isn't any particular way that it has to be done on your application. You have to look to see if you're subject to any reductions where you might need that extra $5,000 as a little bit of a buffer to help you achieve full forgiveness. It really comes down to the numbers.
Right. And from a general ledger standpoint, if that's part of the question here, you should be recording them in their natural classification, not as not as PPP expenses. They should be recorded as payroll or rent or whatever the expenses are.
Maybe you were just separating those out in the event that they were not going to be tax deductible, but they are now, so you don't necessarily have to pull them out on your financials.
Thank you. That is it.
Go ahead, Julia.
We have some upcoming events. You'll get these slides that you can look at, or you can look on our website. Actually, the first one's tomorrow with a market update on investment update and financial considerations for the new year. They do the market updates, I believe, quarterly, and they're very interesting. So if anyone has time tomorrow, that would be an interesting one to pay attention to. Then we have how to choose a financial advisor, Medicare and Medicaid, what should I know now? And then we have a CNAP program, Certified Nonprofit Accounting Professionals Training, which is a 2-day training, which I actually teach. So I'd love to see some of you come back for that, but that's all on our website. And here is Tom and I's emails. Feel free to use them.
Yeah. We welcome any questions, any clarification that you need. We love to follow up and help you out if you need it. And of course, if you're interested in any of our assistance regarding the forgiveness applications or PPP round 2 and eligibility, we can assist with those. So please reach out to myself and I can make sure that we get you on board for those services. And of course, if you need Julia, her email is on there as well, and she can help just as much and answer your questions, specifically the ones that more so deal with not-for-profit entities.
Okay. Well, Tom and I really enjoyed being with you today. On a snow day, it was nice that we could still get together. I have to say, I felt a little bad for small kids today who wore their pajamas inside out and flushed those ice cubes that they didn't get the day off school because of the virtual learning. But I'm glad we were all here together. Thank you.
Thank you, everyone.